Assalamu alaikum dears, and greetings to all of you. Welcome dears to this video. I would be delighted to introduce an informative and quick session in this channel, which focuses on Islamic finance insights. Please support us by subscribing and following upcoming videos. So, let's start our session. Introduction of Sukuk. Sukuk Islamic securities are considered as Islamic financial instruments created for middle and long-term financing due to some limitations exist in Islamic financial system, resulting in lack of use of common bonds. These instruments are very similar to common bonds, however, there are some differences also between the two, and in some cases they bear characteristics of stocks. This has resulted in Sukuk Islamic Securities to be probably considered as a type of hybrid financial instrument. Outside Islamic financial system, hybrid instruments are considered as one of the prevailing and common types of securities. These instruments are divided into several categories, each of which having characteristics of both bonds and stocks. Considering the point that Sukuk are not spe-cifically used in Islamic markets and they are also applicable in other capital markets as a financing tool, in this paper, Sukuk will be intro-duced and compared with prevailing securities in non-Islamic systems. It will also be discussed whether Sukuk might be of use as a hybrid security in non-Muslim majority capital markets, just the same as other common hybrids, because Sukuk are of such a structure which might be free from risks available in terms of other types of hybrids, while they are similar in their advantages. This video aims to introduce and examine Sukuk in comparison with other securities of various aspects so that the concept and nature of Sukuk would be more tangible and easier to understand for the reader. In the other words, in this session we declare the differences or similarities between Sukuk and other securities in terms of the bankruptcy of intermediary, the concept of asset and securitization, and also other concepts. At the end, we want to compare Sukuk and hybrids and express instances of Sukuk which are similar to hybrids so that we make understanding of Sukuk as a hybrid more tangible. For this purpose, in the first part of the video we introduce Sukuk, benefits of that and main players in Sukuk market. In SEC on part, we compare Sukuk with bonds and shares in different aspects. For this reason we will introduce two general models of Sukuk that are asset-backed and asset-based Sukuk and compare each of them with other securities and declare that asset-backed Sukuk is more like shares and asset-based Sukuk is more like bonds. While second type of Sukuk does not match to draft standards of Sukuk that we can observe in asset-backed Sukuk, today it has become increasingly popular. Followed by expression of similarities between asset-based Sukuk and bonds, we express differentiation aspects of Sukuk. Here we more mean asset-backed Sukuk and bonds and deal with their 7 fundamental differences. We also express that what similarities and differences there are between Sukuk and conventional bonds on the concepts and issues such as securitization, asset, intermediary, and on supposition of bankruptcy of the intermediary, and also on the concept of indirect holding. In the same part, we also introduce registered and non-registered Sukuk and Sukuk-related challenges in comparison to conventional bonds. Finally, and in the third part of this session, we introduce Sukuk as a hybrid and express examples of Sukuk that are similar to hybrids like as convertible Sukuk, contingent convertible Sukuk, Cocoa Sukuk, preference Sukuk, subordinated Sukuk, and perpetual Sukuk. Definition of Sukuk. Sukuk are financial instruments similar to bonds and shares that are compliant with Islamic law. Since their inception in 2002, Sukuk markets have experienced dramatic growth rates, attracting the attention of investors, analysts, and researchers alike. Accounting and Auditing Organization for Islamic Financial Institutions (OIFI) defines Sukuk as being certificates of equal value representing undivided shares in the ownership of tangible assets, usufructs and services, or in the ownership of the assets of particular projects or special investment activities. There are 3 requirements for a sukuk to be considered in compliance with the Sharia law. First, the certificates must represent ownership in tangible assets, usufructs, or services from revenue-generating firms. Second, payments to the investor come from after-tax profits. And third, the value repaid at maturity date should follow the current market price of the underlying asset and not the original invested amount. Sukuk comes in many different forms, as financiers are not restricted to create their own variations. However, fundamentally the parties within a sukuk issuance are the firm, the obligor or originator, the special purpose vehicle SPV, and the investors that buy the sukuk. The SPV is a bankruptcy remote entity, separate from the originator, which issues sukuk certificate. Benefits of sukuk. Among benefits of sukuk we can refer to these. Sukuk is tradable capital market product providing medium to long-term fixed or variable rates of return. It is assessed and rated by international rating agencies, which investors use as a guideline to assess risk-return parameters of a sukuk issue. It has regular periodic income streams during the investment period with easy and efficient settlement and a possibility of capital appreciation of the sukuk. Finally, sukuk are liquid instruments and tradable in secondary market. Main players in the sukuk market. The Persian Gulf Corporation GCC countries and Southeast Asia SEA countries are the main players in the global sukuk market. Among the GCC countries, Saudi Arabia, Bahrain, Qatar, Kuwait, UAE are important countries in issuing sukuk. Meanwhile, Malaysia is playing a main role as a leader of sukuk issuers in the world. Other than Malaysia, Indonesia, Singapore also is contributing to the global sukuk market from this region. Today it is not limited to this region only. It's developing in other countries as well, Pakistan, Japan, from other part of Asia other than Asian countries, USA, UK, Germany, Turkey, Egypt, Gambia also are contributing to the market. According to International Islamic Financial Market IIFM report in 2016, a positive development in sukuk market is the appeal of sukuk as an alternative source of financing from new jurisdictions ranging from Europe, Asia, CIS, and Africa, and emerging sign of possible direct entry from North America. It should be noted that, in 2000, total size of the sukuk was only US 1 foot 172 inches million with no sovereign sukuk in the market. According to IIFM report, in the next 16 years, the total size of sukuk has crossed US 68 feet 742 inches million. Are sukuk equity or bonds? It is a financial instrument that shares characteristics with bond and stock, which are issued to finance trade or the production of tangible assets. Similar to a bond, sukuk has a maturity date, and in some of them the holders receive a regular income over the period and a final payment at the maturity date. While the conventional bonds price is determined only by the creditworthiness of the issuer, sukuk price is determined by the creditworthiness of the issuer and the value of the asset. Although sukuk is also similar to stocks in the sense that it represents ownership and no guarantee of a fixed return, at least theoretically and in the standard model of sukuk, but stocks have no maturity date. Sukuk also has to relate to a specific asset, project or service. Sukuk is a relatively infant financial instrument, designed to be a Sharia-compliant alternative to conventional bonds. However, much debate has been raised on the nature of the instrument, particularly in cases of default, where Sukuk holder designation was confused between equity holders and debtors. There are many reasons behind the confusion. However, some people say that Sukuk is indeed equity and not a bond. A Sukuk can be structured on a debt-based model such as Ijara or Murabaha, yet certificate holders still are owners of the underlying asset that is leased to the beneficiary. So either the Sukuk is structured on an equity-based model where Sukuk holders partner with the originator in a completely new venture or an already existing business, or based on a debt-based model. The Sukuk holders are always and surely equity holders and not debtors. There has been considerable debate as to whether Sukuk instruments are akin to conventional debt or equity finance. This is because there are two types of Sukuk. 1. Asset-based Sukuk, that is raising finance where the principal is covered by the capital value of the asset, but the returns and repayments to Sukuk holders are not directly financed by these assets. 2. Asset-backed Sukuk, that is raising finance where the principal is covered by the capital value of the asset, but the returns and repayments to Sukuk holders are directly financed by these assets. According to being asset-backed or asset-based, Sukuk can be more similar to bonds or shares, so we explain the structure of both of them. Asset-backed Sukuk involve granting the investor Sukuk holder a share of a tangible asset or business venture along with a corresponding share of the total risk, that is, a share commensurate with this ownership. In this structure, there is a true sale transaction, where the originator sells the underlying assets to a special purpose vehicle SPV that holds these assets and issues the Sukuk backed by them. The buyers of Sukuk don't have recourse to the originator if payments are less than usual. A true sale implies that the assets of the issuer will not be added to the assets of the originator in the event of default and liquidation. The Sukuk holders must assume any losses in case of impairment of Sukuk assets. Asset-backed Sukuk are, thus, closer to equity than debt, and for that reason are not so popular in the market of Sukuk offerings. Asset-based Sukuk. Asset-based Sukuk, on the other hand, involve the issuer purchasing the underlying assets and then investing, trading, releasing them on behalf of the investor's Sukuk holders, using the funds raised through the issued certificates Sukuk. This structure, most often, takes the guise of a sale lease to the originator and is embedded with a binding promise from the originator to repurchase the underlying assets at maturity. In this structure, the Sukuk holders can only require the originator to purchase the underlying assets. As such, the Sukuk holders have an unsecured debt claim against the originator embodied in the payment of the purchase price following an execution of the binding purchase promise. This implies that Sukuk holders don't have full recourse to the underlying assets, and the underlying assets are not used as collateral. Asset-based Sukuk grant only beneficial ownership to the Sukuk holders, so that in case of default, the investor would be left without any claim on these assets. In this structure, the originator typically transfers to the investors only the beneficial ownership of the SPV issuer. But Sharia stipulates a transfer of assets to Sukuk holders. However, since investors have no recourse to the assets, the structure doesn't pay any attention to the asset risk, but rather concentrates on the creditworthiness of the sponsors of the Sukuk. There are fundamental differences between asset-backed and asset-based Sukuk. The next details set out explain the mechanics of how each Sukuk operates. Asset-backed Sukuk, it is a kind of financing acquisition of assets or raising capital through sale and leaseback like as below. 1. Sukuk holders subscribe by paying an issue price to a special purpose vehicle SPV company. 2. In return, the SPV issues certificates indicating the percentage they own in the SPV. 3. The SPV uses the funds raised and purchases the asset from the obligor seller. 4. In return, legal ownership is passed to the SPV. 5. The SPV then, acting as a lessor, leases the asset back to the obligor under an ijara lease agreement. 6. The obligor or lessee pays rentals to the SPV, as the SPV is the owner and lessor of the asset. 7. The SPV then make periodic distributions rental and capital to the sukuk holders. Asset-backed sukuks certainly have the attributes of equity finance. The asset is owned by the SPV. All of the risks and rewards of ownership passes to the SPV. Hence, should the returns fail to arise, the sukuk holders suffer the losses. In addition, redemption for the sukuk holders is at open market value, which could be nil. On the other side, asset-based sukuk, it is a kind of securitization of leasing portfolio like as below. 1. Sukuk holders subscribe by paying an issue price to a SPV company. 2. In return, the SPV issues certificates indicating the percentage they own in the SPV. 3. The SPV will then purchase a portfolio of assets, which are already generating an income stream. 4. In return, the SPV obtains the title deeds to the leasing portfolio. 5. The leased assets will be earning positive returns, which are now paid to the SPV company. 6. The SPV then makes periodic distributions rental and capital to the sukuk holders. With an asset-based sukuk, ownership of the asset lies with the sukuk holders via the SPV. The payment of rentals provides the return, and the final redemption of the sukuk is at a pre-agreed value. As the obligor is the lessee, the sukuk holders have recourse to him if default occurs. This makes this type of sukuk more akin to debt or bonds. Actually, the asset-based sukuk were structured as debt instruments on the grounds that this is what investors were looking for, and because this is what the market wanted. Another reason for replicating debt-like instruments was that issuers wanted to raise capital without having to sell any assets. Investors, on their part, did not want to become owners of assets and assume the risks of ownership. They wanted bond-like instruments with income and capital guarantees. They wanted their profits to be guaranteed and to earn them without taking risk. In order to enable both originators and investors to realize their respective objectives, a special type of securitization would accordingly be required. Selling the underlying assets to investors by way of a true sale, as required by the Sharia, would not achieve the respective objectives of the originators and the investors. What was required was a type of sale that would enable originators to sell underlying assets to investors and at the same time allow them, the originators, to retain legal ownership of the assets thus sold. This could be accomplished by utilizing a sale that falls short of a true sale. However, such a sale is not available in the Sharia. A sale that falls short of a true sale is, however, found in common law, widely known for its creditor friendliness, or it is recognized as a valid sale. Thus, it was necessary to depart from the Sharia on the issue of sale. Common law practiced in the UK recognized sales that fall short of true sales as valid sales. A sale that falls short of a true sale allows a seller to sell an asset and to retain legal ownership of the asset thus sold at the same time. Such a sale does not require the transfer of legal ownership from the seller to the buyer. A sale that falls short of a true sale transfers merely beneficial ownership on the buyer. To accommodate the objectives of both issuers to retain legal ownership of assets and of the investors to obtain income capital guarantees, arrangers thus resorted to the common law instead of the Sharia notion concept of sale. This decision raised questions. First, was the departure from the Sharia notion of sale justified? Second, how can a departure from the Sharia concept of sale be expected to produce Sharia-compliant sukuk? Third, will investors' interests be adequately protected, given that the sales of the underlying assets give them less than legal ownership of the assets? As a result of a lack of a true sale of the underlying assets by originators to investors, a new class of sukuk emerged, known as asset-based sukuk. It was this class of sukuk that was declared non-compliant by the OIFI in 2008, just months before the recent global financial crisis. It was in this class of sukuk that all the defaults took place. Comparing asset-based and asset-backed sukuk with other forms of securities. In this section we deal with this subject that one of the above-mentioned forms of sukuk is more similar to bonds and one of them is more similar to shares. As mentioned before, sukuk are in two forms of asset-based and asset-backed. In the first type, original capital is guaranteed via tangible or intangible assets of the issuer, and the profit payable to investors is not necessarily stemmed from a specified asset. However, in terms of the second type, both repayment of original capital and income belonging to the investor is directly resulted from underlying asset. It should be noted that in terms of the repayment, it is possible if the asset exists and is not destroyed on the maturity date. Therefore, holders of the second type of sukuk share also the loss. Moreover, in this type due dates for payment of profits are not predetermined, whereas, in the first type a specified amount of profit is paid to the sukuk holders on certain time intervals. In the second type of sukuk, the amount of profit depends on earnings resulted from the asset. In fact, original capital and profit belonging to asset-based sukuk is guaranteed, while original capital and profit belonging to the holders of asset-backed sukuk is not guaranteed and they share both the loss and profit. To the same reason, structures of first and second type of sukuk have been resembled to bonds and stocks, respectively. It should be noted that shareholders divide the remaining parts of the company's assets among themselves in proportion to their shares, due to the stock structure. Meanwhile, in case the originator becomes bankrupted in process of issuance of asset-backed sukuk, holder has objective right as to the assets specifically used for such issuance priority against other creditors. However, because the sukuk holders will be affected by the loss of the same specific asset in the case of being destroyed or discounting of that asset, these securities may be considered similar to the stocks. Each of sukuk types, e.g. lease-based sukuk, may be of asset-backed or asset-based type. In asset-based sukuk, holders are considered as beneficial owners, and, in terms payment of profits has failed, they are entitled to refer to the originator. By beneficial ownership, we mean some elements of the ownership right package such as the right to use the profit from the asset belonging to the beneficial owner, even though the legal ownership belongs to another person. Therefore, these securities hold a value independent of underlying asset and are considered beyond title deeds. Their meaning is closer to the concept of common bonds, while they do not represent or prove any specific asset. In asset-backed sukuk, holders are owners of the asset, and in case the originator fails to pay the profit, they are entitled to collect their debts from the asset. Theoretically, Islamic financial system is mostly considered as an asset-backed financial system, connecting each financial claim to a real asset related thereto. In Islamic financial system, each financial claim is considered as a dependent claim, returns or performance of which depends on return or performance of a real undertaken asset. Practically, issuing the most prevailing type of sukuk, e.g. lease-based sukuk, is based on asset-based system. Payment of principal and profit is guaranteed and it resembles the structure of bonds in non-Islamic countries. Although holders of bonds are not theoretically sharing loss with the originator and they just receive profit, in case of issuance of Islamic securities, the risk imposed on the holders is removed with the help of insurer institutions and their function is identical to that of bonds, in practice. In non-Islamic countries, Asset-backed securities resemble guaranteed debt, i.e. the company puts its own assets such as financial claims as a support for loan payment. As a result, holders of asset-backed securities have to pay more attention to those assets backing a loan, rather than overall assets of the business. In asset-backed Sukuk, in case the originator becomes bankrupted, holders of Sukuk have priority against other creditors because their securities represent their objective right towards the asset backing the issuance of those securities. Asset-based Sukuk were foreseen because the issuers were not willing to sell the asset and investors were not ready to accept the risk resulted from asset-backed ownership. They were demanding documents similar to bonds, with fixed incomes. It seemed necessary for the asset backed to be sold to investors, transforming them to beneficial owners, while the legal ownership still belonging to the issuer. This way, investor would just share the profits stemmed from the asset, which, this kind of ownership is not accepted by Sharia. However, supposing issuance of asset-backed Sukuk, it should be cited that in fact there is still no difference between the two structures asset-backed Sukuk and bonds. That is, in both cases, and if the project is not profitable or the assets are lost, the loss is borne by the investor. The difference is that, in terms of Sukuk, possible dishonoring is already included in the contract concluded between investor and issuer. So, the economic result is the same even if legal analyses in terms of Sukuk may be based on consistency of wills and also Sharia. This way, the only difference between asset-backed Sukuk with bonds and conventional term is that Sukuk holders share the loss and profit through contract, in which the buyers of this type of securities explicitly exempt the issuer from payment of profit, in case of bankruptcy. On the contrary, non-payment of profit resulted from bankruptcy in terms of conventional bonds depends on an implicit provision. That is, buyers of bonds as reasonable and normal human beings implicitly accept incapability of the issuer to pay the principal or profit in case of bankruptcy, and, knowingly they buy the bonds. So, we may not differentiate between asset-based and asset-backed Sukuk in terms of economic effects. Again, it should be noted that in Islamic economy and financing, asset-based securities also make the philosophy of these markets to become realized. The reason is that ownership is a credit-based relationship, and what difference it makes for an individual's ownership to be based on tangible or intangible and nominal assets. Similarities of Sukuk and bonds may be considered as their liquidity in secondary market, their credit being rated by rating agencies, and variety in their design and supply. However, it has been told that Sukuk differ from common bonds of financial markets in 7 aspects. This section will explain these differentiation aspects. Firstly, Sukuk are indicative of ownership to a certain asset, while bonds are just indicative of a debt obligation, i.e. the relationship between the issuer and purchaser of bonds resembles the relationship between the lender and borrower. Issuance of bonds is backed by money outstanding claims, while Sukuk are issued through support of tangible and real assets. Of course, apparently the relationship of people with tangible assets is based on ownership, but this is not so in practice. Sukuk owners have no interference in the process of managing and control of the asset. They are not informed of the issuer calculations. The result in general is that there is a possibility for efficiency of the Sukuk to be decreased. Secondly, the subject assets of Sukuk shall be authorized and tangible upon Sharia definition, whereas securities could be backed by intangible assets and even those assets not accepted by Islam. Thirdly, validity of securities depends on and is measured through credit of its issuer, whereas validity of Sukuk depends on value of the assets backing it. Therefore, if we analyze Islamic securities upon the underlying asset, the buyer shall make some expenses to investigate if the holder is really the owner of the Sukuk indication underlying asset or not. Moreover, The buyer has to check for the underlying asset to see if it is wasted and if its real value matches the value of the sukuk he is buying, or not. Fourth, selling sukuk in secondary market is similar to selling the ownership of an asset. However, selling bonds is considered as selling an ownership right package which has value by itself. The fifth difference is, sukuk are apparently a type of contract in civil partnership which results in joint ownership of people over underlying assets. Of course, this kind of structure of sukuk ownership justified in form of civil partnership will be followed by reduction of economic efficiency of these securities. For example, in civil partnership it is important that how well the partners know each other, because these kinds of partnerships are considered as the individual's company. Whereas, those people who buy sukuk don't know each other and have to pay for such identification. This increases transaction costs and is considered as a threat to economic efficiency of these securities. The problem implies wherever partnership in physical asset is arisen. Of course, sukuk are only theoretically of contractual basis and considered as a title deed. In practice, they are not described as an ownership because the holders have no right to possess, partition or manage the underlying asset. And they have no voting right to decide on the asset-related issues. They are just entitled to receive principal and forecasted profit for the security. So, it could be suggested that these securities are born through contract and transacted in form of a package for ownership rights. Sixth, holder of sukuk shares the profit and loss of the issuer, whereas holder of bonds just shares the profit. However, in the section titled Difference between Asset-Based and Asset-Backed Sukuk, we have mentioned that from this point of view they are not different, because profit of sukuk holders also is guaranteed. It has been told that Islamic securities have some similarities to conventional bonds in terms of operational method. However, in terms of content and nature, they are basically different. Conventional bonds are usually designed according to a contract of loan with interest. Holders have no right as to the ownership of real assets and economic activities and profit resulted therefrom. They just receive a fixed or sometimes variable interest on due dates. In cases of Islamic securities, holders share the ownership of real assets and economic activities, and any profit from projects and activities affects them. In this case, profit is affected by real section of economy. However, contrary to what were theoretically considered as desirable in invention of sukuk, i.e. dividing profit and loss together, the issue did not come to practice. This is why it has been told that in the process of issuing sukuk, the same conventional bonds are offered to public, labeled as Islamic. It was mostly believed that interest-based system of bonds will be replaced with profit-loss sharing system PLS. However, in sukuk also theoretically the parties share in profit and loss, but in practice if the project is profitable, investors receive just an amount as profit, and in case the business bankruptcy, financial risk will only be imposed on investors, and the business just loses its workforce. It is the same as what happens in case of bonds. To the same reason, in financial market crisis in 2008 which resulted in the securities markets crash, those markets relying on Islamic securities were also affected because sukuk has been considered as a copied form of conventional bonds, not as a real and standard asset-backed sukuk, by many. The seventh difference is that issuance of bonds imposes the risk on the borrowing institutions, while the system for issuing sukuk asset-backed sukuk imposes the risk on investors and financing parties. The results from a study show that total imposed risk in the latter case is more than the total risk stemmed from bankruptcy of those who issue bonds. Issuers of sukuk also transfer the risk to insurers through insurance contracts. So, no difference exists between the two securities in this respect also. This way, the difference in structure of these two categories of securities is more theoretic, and economically there is no fundamental difference between the two. In Sukuk structure, asset-based Sukuk, holders of these securities are beneficial owner of the underlying asset. These securities represent proportional and simultaneous ownership of existing asset or a collection of various assets that are considered as collateral against current or future cash flows derived from these assets during a certain time period. The purpose of this section is to clarify securitization process in Sukuk structure. As we know, conversion of assets to securities makes those commodities, claims, or credits incapable of becoming cash, or those which are potentially unusable, to become convertible to securities and also transferable, accordingly. Conversion of assets to securities enables minor investors to buy small parts of the asset without being enforced to pay entire price of the overall asset for its purchase. Contrary to guaranteed debts, converting assets to securities means transfer of ownership of the asset to a SPV, which the latter subsequently sells as related right over the assets to the investors, against cash payment. Then, the process leads to liquidity or improving it. In other words, conversion to securities is a process during which the assets belonging to the owner or the originator will be extracted from the balance sheet. In turn, financing would be made by those investors who buy a tradable financial instrument. The instrument represents such a debt, with no reference being made to the first lender. Process of converting the assets to securities makes the company's procedure of investment more efficient. In fact, converting the assets to securities is an organized process upon which loan interests or other receivables and claims are packaged and underwritten. Then, they would be sold in form of asset-backed securities. In the process, when the company's assets are backing issuance of securities or Islamic securities and the asset is converted to securities, securities become valuable and could be transacted in primary and secondary markets. The asset may be the company's loan or mortgage assets. In Islamic financing system, generally in process of converting assets including mortgage loans to securities, the company or institution in need of financing establishes a SPV, SPE, or SPC and sells to it those of its assets which have prospective cash flows. The SPV issues asset-backed securities to provide money required for the purchase of aforementioned assets, and the securities are sold to all of the investors. Then, the latter pays to the originator the fund obtained from selling the securities for purchase of financial assets. Those investors who have bought asset-backed securities obtain profit from cash flows stemmed from financial assets of SPV. Underlying assets are different in terms of bonds, comparing to Sukuk. In general, what the term asset suggests, an issuance of bonds including material and immaterial properties, concerns outstanding claims or cash acting as a support and guarantee for issuance of such bonds. Asset in the process of issuing Sukuk. Asset-backed Sukuk suggests tangible assets converted to these types of securities possessed by Sukuk holders, while this is not considered as collateral for the principal and the profit resulted therefrom. This way, asset belonging to the issuer of conventional bonds, which is considered as a base for such issuance, is called underlying asset, because it forms the basis for the issued bonds. However, the issued bonds will be separated from underlying asset and no longer explain it. Whereas, in Islamic financing and in terms of Sukuk asset-backed one, underlying assets are considered as the basis for issuance of Islamic securities, and Sukuk are exactly considered as the title deed and explain that kind of asset. For example, in Ijara lease-based Sukuk, underlying assets are those assets sold to the SPV, based on which the SPV issues Sukuk, and Sukuk holders are considered as direct owners of the underlying asset. The asset is the so-called underlying asset. Concept of SPV, special purpose vehicle in Sukuk. The difference between SPV as an intermediary in the process of issuance of Sukuk and the concept of intermediary in conventional bonds. Financial intermediaries are a large part of financial structure formed to reduce conversion costs and to make depositors, loan takers, and minor investors capable of benefiting from financial markets. Traditionally, intermediaries for securities are those legal entities assigned to keep securities belonging to the investors in their electronic systems. Sometimes, they become the owner themselves. The latest concept is related to the concept of intermediary in indirect system of ownership. In direct system of ownership, the intermediary, which is different from the intermediary institution in the system of issuing Islamic securities, will not be legal owner of securities and just is assigned to keep them. Concept of SPV in case of Sukuk is different from the concept of intermediary, including brokers and depository corporations. As an agent for issuance of various kinds of Sukuk, SPV is the only institution capable of such issuance. The originator intended to issue securities for its own financing has to do it just through the SPV. The SPV plays reciprocal role of a proxy. From one side, it is considered as a proxy to the originator for some issues, and as for some other issues, he acts as a proxy to the security holders. It acts usually in behalf of originator before Sukuk issuance, in behalf of investors after issuing and transferring Sukuk to investors. Although no separate mandate is concluded between the SPV and the originator as to the performing the originator's activities, such issues as contracting sale agent and market maker, or acting as an underwriter obligator implies assignment of some sort of implicit proxy to the SPV by the originator. After transfer of securities to the investors, SPV introduces itself as a proxy to Sukuk holders in terms of concluding contracts related to the underlying asset, while it transfers the Sukuk to their holders. This authorizes the SPV to take action regarding concluding such contracts as purchase, lease, and guarantee contracts, etc. after issuance of Sukuk. SPV takes action also for receipt and distribution of profit among Sukuk holders, in proportion to the principal. Difference of Sukuk and common bonds, in case of bankruptcy of the intermediary. In indirect holding system we may encounter risk of bankruptcy of intermediary. This section explains that in Sukuk and supposing bankruptcy of intermediary, this risk does not exactly exist because the holding in Sukuk system is mostly direct, not indirect. As we know, the effect of separating direct and indirect holding would be brought up, supposing bankruptcy of the intermediary. That is, supposing bankruptcy of intermediary, whether intermediary creditors have priority over customers or not. Many Roman Germanic law countries have not answered to the question. Korea, Japan and Germany are considered as few civil law countries, having some regulations in this respect. In Korea, the issue has been referred to Securities and Exchange Act. Accordingly, the customer is known as the ultimate owner of securities, instead of intermediaries. The same provisions have been provided in separate legislations, in Japan and Germany. So, in case of bankruptcy of the intermediary, customers have priority against creditors of intermediary. Unlikely, some people believe that where no explicit act exists, no assertion could be made in terms of priority of customers. It seems that a separation should be made. When the intermediary does not benefit from those securities in his possession, customers have priority against creditors of intermediary, because the intermediary just acts as a trust and holder of securities. However, in those cases that the intermediary is the real owner of securities, this could not be asserted that customers are prior to creditors of intermediary. It goes without saying that, in this case, intermediary's creditors have priority against customer, because intermediary possesses the securities and any legal rights stemmed from. However, some people believe that an indirect system of ownership which intermediary is the legal owner and customers are considered as real owners of securities, necessarily, the law shall set the obligations in this respect. In case of bankruptcy of intermediary, we may not suppose customers have priority against creditors to the intermediary. The problem does not exactly imply for Islamic securities, because from among rights and obligations set for intermediary institution SPV, we may also refer to selling and renting those assets belonging to the Sukuk owners, as the case may be. However, the institution has no simultaneous ownership with holder of securities over assets, so that any probable claim by another person or creditor except for the Sukuk holders would be prevented. So, no dispute arisen between creditors of intermediary institution SPV and Sukuk holders would be probable. Of course, in case Sukuk has been foreseen in an indirect system of holding, these bonds bear also the same problem, and aforementioned solution for conventional bonds is applicable, too. The question may arise that in case of bankruptcy of the originator, which one of the originator's creditors or Sukuk holders holds priority? The answer is that, to convert assets to securities through issuance of Sukuk, eligible assets have to be first separated from original company and transferred to special purpose vehicle entity SPV. This is usually a limited liability company. Transferring the asset to the SPV takes away all asset-based risks from the original company, while the risks are transferred to SPV. Moreover, Sukuk holders also become sure that all asset-based rights belong to them and no other person would be liable to any claim in this respect. However, if the asset had been included in balance sheet of the original company and not transferred to a SPV, then creditors to the originators also may have been claimed those assets. Again, and as an example, in lease-based Sukuk holders have objective rights as to the underlying asset, and Sukuk are theoretically considered as a title deed. Therefore, a rising dispute between creditors to the originator and Sukuk holders is basically denied. Comparing concept of ownership in terms of Sukuk and indirect holding in conventional bonds. In this section, we aim to show some similarities between ownership of bonds in indirect holding system and ownership in Sukuk system. In process of issuance of Sukuk, SPV as a trust commission agency is established to own the assets, and holders of these financial certificates have only joint benefit in what the trust owns as the assets. In other words, an SPV works as a commission agency, i.e. buys an asset in its own name as nominal owner and to the benefit of customers, while it sells the asset in its own name and to the benefit of customers. In fact, there are benefits from the asset which are sold, because the asset itself never would be possessed by investors. As it could be observed, the intermediary agency performs almost the same functions done by the trustee in trust and works as an intermediary between investors, financial suppliers, and the originator issuing institution. This forms the nature of indirect ownership holding, i.e. a relationship based on intermediating between the issuing party and the investor. The procedure is exactly similar to indirect holding of common bonds. In the process of issuing Sukuk, the intermediary institution SPV as a commission agency on behalf of the originator is commissioned to sell his asset, and on the other side, as a commission agency on behalf of investors is commissioned to buy underlying assets to their benefit. Since the price of such asset is valuated upon the market value and not mutual agreement of the parties, the commission agency SPV is authorized to possess the asset as a buyer and then to sell the same asset to the investors, through issuance of Sukuk. The Sukuk system is just one step behind indirect ownership, in a way that physical bonds would be possessed by the investors and the commission agency SPV has no responsibility for custody of securities, which in near future would be resulted in paperwork crisis. To explain exactly the difference between indirect holding system and those countries issuing common securities and those countries engaged in issuance of Sukuk, we have to study similarities and differences existing between the two. In Islamic system of issuing securities, Sukuk represent underlying assets. However, in those systems issuing common securities, these securities represent the value of underlying assets owned by the issuing company. Owners of Sukuk may sell them and the amount they receive in return is equal to the value of underlying asset at the time of selling the bond. Owners of securities in those countries following indirect holding systems also may sell ownership of profits and the amount obtained in return would be equal to the value of underlying asset of the company at the time of selling securities. Ownership of holders of securities in neither system is considered as complete, i.e. they just are owners of the effects of ownership such as the right to receive related profit. For example, in none of the two systems, owners of securities have the right whatsoever to possess the underlying asset. The real effects and nature of ownership in both systems issuing Sukuk and common securities is similar, however, they differ in appearance. But legal world deals with the intent and not the external aspects. The only difference existing between the two systems in terms of method of ownership of securities is that securities holders in non-Islamic countries have no right whatsoever as to the possession of the securities. They are just real owners of benefits resulted from these securities, i.e. they are entitled to receiving profits, and the intermediary institution holds securities in electronic form. However, holders of Sukuk have them in their possession with no right to possession or division of the underlying asset. This is exactly the same point stimulating those countries issuing Islamic securities to foresee indirect holding system, because material possession of Sukuk in near future will lead to paperwork crisis, e.g. America, 1969, due to public interest in performing transactions through Islamic securities. So, our proposition is that these bonds also would not be possessed by their holders and precise systems would be made just available to the SPV or other intermediaries such as central depository corporations to keep them in electronic form, and holders of Sukuk only benefit from their profits. Therefore, similar to DTCC Depository Trust and Clearing Corporation in America being located at the head of intermediaries hierarchy and having a legal entity within itself as seed company, we may also apply such an approach in those countries where Sukuk are issued. That is, depository corporations in these countries act as a mother company and create an institution of legal entity affiliated to themselves, so that the institution be enabled to possess and keep the issuer's securities in electronic form and then to sell the rights stemmed therefrom to the investors. This way, the bond issuers sell their Sukuk to the depository corporation in form of large blocks, then, this depository corporation sells the Sukuk to brokers and other investors, in smaller blocks form. Thus, the electronic Sukuk are primarily bought by the depository corporation as a brokerage and kept by the same corporation, after being sold to the holders. It should be noted that, in case an indirect holding system for Sukuk is foreseen, the ownership shall be justified according to the brokerage institution, because, in Islamic countries just like those countries with civil law, simultaneous ownership of an asset is not accepted. However, if the issuer country is within the common law countries such as England, the ownership will be definitely justified based on trust and simultaneous ownership of SPV as legal owner and investors as beneficial owner. This way, Sukuk will be owned by a legal and beneficial owner at a time. Therefore, in case electronic Sukuk and establishment of indirect holding of them is foreseen, these bonds could be justified differently based on the issuer country, i.e. in those countries conforming with civil and Islamic law, according to brokerage, and in common law countries, on the basis of trust and simultaneous ownership. Comparing registered and non-registered Sukuk with other securities in this respect. Securities may be divided into two forms of registered and non-registered securities, in terms of their method of transfer through taking delivery and handing over, or booking. In case of non-registered securi-ties, ownership is transferred through taking over the physical form of bonds. However, in case of registered securities, ownership is registered and transferred in electronic form. Sukuk will follow the same pattern of division. Sukuk being registered or non-registered is related to the type and nature of these bonds. Such as, lease-based sukuk are not currently issued in non-registered form, because they represent joint person ownership and underlying assets. So, at time of their transfer in the secondary market, buyer shall be specified and he could not be transferred through taking delivery. Whereas, some other sukuk types may be issued in non-registered forms, including partnership-based sukuk. These types are those financial certificates of identical value, used for accumulation of funds necessary for setting up new projects, development of current ones, or financing for partnership-based businesses. Those PEOPLE holding sukuk are considered as the owner of project or its assets in proportion to their share from partnership. Partnership-based sukuk could be transacted through taking delivery. Sukuk-related challenges in comparison to conventional bonds. Accepting the perspective which considers sukuk as being asset-backed, one of the challenges issuance of sukuk would be confronted with is that underlying assets for issuance of sukuk have to be tangible, although selection of the same tangible assets is also restricted. The same problem results in lowering speed of financing procedure of the companies and makes us to believe that although sukuk are considered as an invention in Islamic domain of financing, they do not have functions of bonds economically. Of course, some people believe that sukuk are basically different from bonds and in fact, a third type of securities, something in between of stocks and bonds. These groups consider inefficiency of sukuk to be stemmed from failing to observe existing standards in their issuance. The difference between ideal sukuk with those issued in reality is to the level that according to a report 2008 by Accounting and Auditing Organization for Islamic Financial Institutions OIFI, 85% of issued sukuk till 2008 have failed in observing defined related standards. For example, legal ownership of the assets has not been transferred to the sukuk buyers. The reason is that real sukuk have no economic efficiency for the issuers, which makes them close to conventional bonds. For example, considering lease-based sukuk al-ijara, we may see that they are designed in a way that the holders receive an amount as rental on due dates. However, in reality the amount by no means reflects the rental from the subject asset of sukuk, rather, it is the interest rate of what has been invested by the buyer for purchase of these bonds, or for example if the assets considered as a base for issuance of sukuk are two different assets, commonly in the market two different rentals are supposed to be specified. However, it is observed that the amount is identical for various sukuk based on different assets, and the basis for specifying it becomes close to the interest rate. Such an approach is problematic in terms of the market economy. For instance, in those conditions that an immovable property is the base for issuance of sukuk and related rental increases, there is a possibility for profit of the holders to be reduced just because of decrease being made in interest rate of international markets. Another presupposition concerns the case that the value of the asset used as the base for issuance of sukuk is fluctuated and may be decreased, which should normally affect and reduce the rights of holders of sukuk. However, it is observed that their profit remains intact. Another challenge related to the issuance of sukuk asset-backed sukuk is the point that contrary to non-Islamic securities, underlying assets of lease-based sukuk are necessarily tangible assets such as immovable properties or other assets, whereas non-Islamic securities may be backed by intangible assets, including outstanding claims of the company. On the other side, payment of rental as profit and the obligation to redeem the property is considered as a guarantee for repayment of principal amount of sukuk. However, the problem with these assets is lack of variety. While the originator may be willing to replace underlying assets with some other assets. A solution foreseen in this respect is that the parties may agree upon all or part of the assets forming the basis for sukuk to be convertible in certain conditions, upon the originator's recognition. In this point we reach to the end of today's session. I hope that this video provided an informative and quick session. If you are interested in this area, kindly subscribe in the channel because we are planning to provide deep information as well as the latest reports and news about Islamic finance. We look forward to your subscribing, your like, as well as your suggestions in the comments. Have a good time and best regards.